somewhere, I'm going to use this space right here on my study sheet for adjustments. So I'm going to cut this off here, and property taxes. Step 1, divide property taxes by 12. This is to get your monthly. Divide property taxes by 12 to get your monthly. Step 2, multiply answer by the number of months. Okay, so you divide your property tax by 12 to get your monthly, then you multiply answer by the number of months that you need to repay the previous owner. This is a rare occurrence, but it has come up several times over the last, I can only go back like 10 years or so, right? Because there's COVID, no exams. So if you ever have to do an adjustment, that's what you do. For me, if somebody bought my house, there would be no adjustment because I pay month to month. Like I literally pay every month. So if Isaiah moves in next month, he just keeps paying. Like I haven't paid in advance, so I'm just paying month by month. He moves in and he just keeps paying whatever I still owe for the year, okay? So you wouldn't have to repay me, you just have to continue paying to the city. But if it has been prepaid, then you need to pay it back to the previous owner, okay? That's how that goes. So let's zoom out a little bit. I would also highlight this one, right? Because this is a bit of like an oddball scenario. Is there anything on insurance on mine? I will check insurance because oh yeah, right here. Insurance for me is right here. So we've got tenant and homeowners. What determines the area of the house? Distance from emergency services. That's what they use to kind of come up with that. I have right now, let's do a little bit of a test review already. Is my study sheet ready for the test? Like if it were to happen today. I've got GDSR. And under GDSR, I have the maximum housing. Okay. I've got the maximum mortgage payment. You take your housing, you subtract monthly heat, monthly property taxes. Maybe that's what we'll do today. We'll review GDSR. Okay. There'll be an AC on that. To lower your GDSR, you can do several things. I have my advantages of buying and I've got advantages of renting. Have a few of those. I have some examples of what preventative maintenance could be. This one I would caution because I cannot prepare you for all scenarios, but the main ones are roof, right? Your furnace, your heating situation, your foundation. Those are basically the most important ones. If you can keep water out of the house, you're doing pretty good, okay? So make sure you have a few items there. Things you do to prevent major emergency repairs. I don't have emergency repairs here. Oh yeah, I do. Actually, I do. So let me highlight that, right? Preventative maintenance to avoid emergency repairs. What are emergency repairs? What does the word emergency imply? Do you have a lot of time to think about it? My roof is leaking. I'll take a week or two to like research and call around. You don't. Which means you're probably gonna pay more than what you would have wanted to. Okay, because you don't have the luxury of time. So preventative is, so even if you go check your roof and you find that it needs to be replaced, it still is going to cost you less if you do it in advance, right, than if you have to do it right on the spot. Mortgages, okay, have your formulas for mortgages. I have that right here. Okay, how to figure out the monthly payment, how to figure out the total interest I paid. Emphasis on once you figure out the mortgage, we use it for several of the formulas, okay? It creeps up several times. I would encourage you to have that. This formula right here, I almost forgot. I wasn't sure if I gave this to you, but I did. If you need to figure out the down payment as a percentage, so let's say someone saved up a certain amount of money and you want to make sure they have enough. What do we need minimum? Minimum in Canada, 5% minimum. Like to get approved, I would say you should save up 7 to 10% because of all the extras. But just for the mortgage, you need 5. So I'll write that down maybe next to it. 5% down minimum, okay? I'm writing this down in case you forget. So you would take the down payment as a dollar amount, divided by the total house price, times it by 100. That's how you get it. To save on interest, I have a few items that I can do to lower my payment. I have a few items I can resort to. Oh, GDSR, what's the magic number for GDSR? My study sheet is not good on that end. It's there. It's there. Oh yeah, I do. Okay, right there. You below 32% is good. You're approved. Must mention, right? Must say 32%. Like that magic number has to come up if you're justifying whether or not somebody's going to get approved. You must make reference to that. There's no gray area for the province on that one. Another one I want to review because I kind of just glanced over this one. If it's monthly, you're good, right? 12. If it's any of these other ones, you take your income, you multiply it by whatever pay period you encounter. So if you get weekly pays, you would take your income times 52, then divide it by 12 to get your monthly. That's what this section is supposed to do. And by the way, guys, would you take your monthly income, multiply it by 12, then divide it by 12? Sure, you can do that. You'll get the same answer. It's monthly already, right? So it doesn't hurt if you tell yourself to do that every time. Let's go to the back side of my study sheet. I have some insurance here. This is the master formula. When it's tenant insurance, if you go over 75,000, you're gonna have to activate this one. Activate sounds so. Activate overage, right? If you're staying under 75,000, this completely disappears. And if it's a $500 deductible, that disappears, right? So you're basically just grabbing a number from the table. Home insurance, if you're going over 200,000, you have to activate this part right here. Okay, so you remember that. We've got land transfer tax. I have a few examples on how to do it. Do you remember your property taxes? No, maybe not. You need to look that up. Credit if applicable. And usually it's education tax, municipal, and any improvements. okay? When it comes to improvements, you take your frontage and you multiply it by the dollar amount. I can tell you that this one, the province usually gives you the dollar amount. They will not give you a table, okay, usually. And then I've got a bunch of one-time costs, and I've got ongoing costs. So make sure you have a few examples of those. These are, honestly guys, these are slam dunk. If you have your study sheet, if you know what an ongoing cost, that could be a full mark or two, right? Just knowing what they are. So remember that. I make another note here. Always divide your mill rate by 1,000 if it shows up. Don't just leave it. And yesterday I added this here. This is my amortization table section. This can be made a lot smaller if you ask me, right? And so it tells you the inner workings. It tells you what to expect in each cell as you progress, and things like that. Okay, all right. You can take a picture. Just make sure you put it back in the sleeve. You can ask me for it. There we go. Okay, so I'm gonna mix it up a little bit for now to warm up, okay? Yesterday we stopped with the adjustments. This is on page 105. I did assign this one here, right? Did you do it already? Yeah. Okay, so I'll just go over it real quick. The Smiths move into their new home on October 1st. First? What is it? But the vendors already paid $37.44 for the tax year. Part of the Smiths closing costs. I hope that closing cost doesn't freak you out. It's not like, what is this? It's just what happens when you close the deal, right? You need to pay off of certain things that the previous owners have paid for. And they must submit to their lawyer their portion of the tax. That is from October 1st to December 31st. So if you have a hard time counting, just write out the months, right? So it's 3 months. So again, you got to pay them back 3 months worth of property taxes. So you go $37.44. This is the first step. Divide that by 12. That's $312 per month that this equates to, right? And so to be repaid is 3 months, right? Times 312. And that's 936, as I already gave you the answer yesterday. Okay, that's that. I wonder if I should do this with you. If you're moving in halfway through, I would go daily. Sometimes you have to pay by the day. I've never seen that, and I don't know if I want to go there. I'm just going to leave it, okay? But if it's daily, you would take your property taxes divided by 365, and then you would literally count how many days are left till the end of the year. And so every day you have to, like, that's basically what it comes down to, okay? But you don't have to worry about that. Okay, I'll stop here. Yeah.